Kap International has reported a headline earnings per share of 29.1 cents. I caught up with CEO Joe Grove on the earnings.
Now, look, I think the most important thing that we've done is generated a lot of cash. That was a big focus from the beginning of the year when we put the group together, and we're very pleased with the cash generation. Extremely pleased.
Right. So some of your divisions have done well, but your logistics division has come under a bit of pressure. And then taking into account that the current economic environment is still a little lackluster, so to speak. I mean, how are you going to ensure that you turn this around going forward?
Yeah, look, things are tough, but we as management, we've got a job to do, and we've got to make plans. And the guys are making good plans. I think that we've got really good plans in place for the year ahead. So, we're not totally despondent. The logistics environment was difficult because of the strike, but that's behind us now. And the second half of the year was better. We didn't make up all the costs because it's almost impossible to make up those costs. But we look forward to positive contribution next year.
There have been some analysts who have expressed concerns around your gearing. You have managed to get it down from 64 to 50%, but at what level would you be comfortable at?
I think we're at about the level now, as reported in these results, where we'd like to be. If we can pay off more debt, it would be fine. But we're not worried about the debt profile of the company at all. The company, as you said, most of the loans or most of the debt is with Steinhoff. There's no urgency. We've got a repayment schedule, and we're quite confident that we can repay that debt over that period.
You have announced the sale of Bull Brand, and we're still waiting for the outcome on Brenner. What other candidates are on the selling block?
We run our businesses as best we can, and if they're broken, we fix them. The food assets was a particular difficulty for us because we just weren't a player. We had two smallish assets in Bull Brand and Brenner. We were never going to be a major player in the food industry, with those assets, unless we made a major acquisition. So it made sense to us to dispose of them. We got good money for them. The Bull Brand has already been approved by the Competition Commission, and we are awaiting approval now for Brenner. But there's nothing targeted in the rest of the portfolio right now.
Well, there have been speculations that we could possibly see Claudina and Jordan next. Is that true?
Yeah, I think there's been some speculation in the press. We don't like to get involved in that. It's not, we've got teams to keep motivated, and we need to build those businesses. So they're not on the chopping block per se, not at this stage.
You have mentioned that cost containment is going to be a big focus area for you, as well as heightened efficiency. Now, what cost efficiency programs are you putting in place?
I think what happens, you in any business, you can become a victim of your own success because your businesses grow, and we've had good buoyant economy over the last 10 or 20 years. You have to watch the cost line like a hawk. You can't let it run away from you, and unfortunately it does tend to run away from you. So you create structures which perhaps in difficult times, are not sustainable. So we have a constant focus on costs. We're constantly looking at what will make us uncompetitive. And the management teams all have a very, very strong mandate to take cost out of the business.
By leveraging off inefficiencies, could we possibly be seeing job cuts?
Yeah, hopefully not. But often you have a situation where some people have reached the end of their careers, or reaching the end of their careers, and it makes it a little bit easier to encourage those people to maybe take early retirement, and you can maybe save costs in that way. This is not a wholesale plunder of the workforce. It's not that's not what we envisage at all. But you've also got to watch what you buy and how you buy it and where you buy it.
Let's talk about your expansion into the rest of Africa. Are there any specific regions that you're targeting? We
currently operate in Malawi, Mozambique, Tanzania, Namibia, Kenya, Uganda. We've recently visited Ghana, a very interesting country, wonderful, wonderful people, highly educated, very peaceful, nice place, a really nice place. We were very impressed. So we're looking at some opportunities there, but doing business in Africa is challenging. It's there are governance issues, and you have to make sure. Unfortunately, our continent is corrupt. There's fairly a lot of corruption that goes on, and we're a corporate, and we don't play with those rules. You know, we don't play in that space. So one has to be very, very careful where you go. But we've had incredible success in Africa, following our customer base up into Malawi, Tanzania, and these places, and that's been very successful for us. So we'll follow that model. We'll continue with that model.